talking about the all-share index, let's bring in Will now to bring us up to speed on what's playing out at intraday.
Oh yeah, Ladi.
Yeah,
It's
I don't know if you're beating inflation.
well, apparently from the color of my shirt, you can tell what the market was doing at the time I checked it.
So inflation is beating you.
No, inflation. I'm actually beating inflation.
Oh,
that
you're beating
personally,
inflation.
I'm beating inflation.
So maybe the colors from the struggle.
Yes, we're just trying to be supportive. It's more like solidarity with the NGX. That's what we're doing right now. But basically, let's look at the numbers at intraday. We see the market down from yesterday's bullish close, and that shows kind of like sentiment in the market is a bit more like profit taking. And it's the week before Christmas, and people will have to, take profit where they can. Especially we see the flour mills, the suspension of the shares by the NGX so they can delist. The process of the listing is ongoing right now, and we'll get the analysts to speak more about that. I want to know what's going on behind the scenes for flour mills and what investors should expect. But let's just dive in now and see how that is going on, Ladi, just to talk about it. Now, so looking at the markets at intraday, major equities zooming in on that. With the markets we track, we see that the NGX was down at the time I took the numbers, 0.11% down, still at 99,000 level. And look at GSE at intraday. It's more like a bloody time for equities in Africa, especially for major equities. You see 1.01% down. And we're just speaking to what's happening with Africa. It seems like investors are carrying on the same sentiments, especially what's happening in the U.S. right now. The U.S. Fed is meeting today, starting their rate decision meeting today to see what they can do about rates tomorrow. Now, let's look at Egypt and see what they did at intraday. It's also down 0.15%, 30,000 level still hanging on there. And then we see the NSC, that's in Kenya, let's not say in Nigeria, closing Monday's trading in the green. That's the only one for yesterday, but we'll see how they close business today. But let's have more conversation about what's happening on the NGX in Nigeria, and we're having this conversation with an expert, Dr. Oladipupo Tijani is the Group Chief Executive. First Icon Group joins us virtually from his office in Abuja. Good afternoon, Dr. Tijani. It's good to have you on the program.
Good afternoon, Will. So, thank you for having me.
Let's just bounce off and kick off with flour mills. I was talking with Ladi about that. And the suspension by the NGX. We did get this news earlier, much earlier, that they were going to delist, which was more like rumors then. But right now, it's the trades in their shares have been suspended. Can you tell us what's going on behind the scenes here?
Essentially, it's been an interesting times for companies like flour mills. Earlier the year, we saw the information coming into the market around majority shareholder, Excelsior Shipping Company. The current investor, of course, were aware that is holding about 63% stake in flour mills, valued at some over 140 billion as of September. The news filtering into the market was that Excelsior, of course, plans to buy out minority shareholders under an offer over 100 billion. Of course, the initial plan is to delist, although further information also hitting the market is that because of a restructuring plan, the company is intending to return to the market via post-restructuring with a dual listing. Of course, there's also information around further expansion, streamlining the business into key major companies to attract both local and foreign technical and financial partners. The company is also expected to bolster into its more operations by investing over over $1 billion US over the next 4 years. But of course, it's also expected that expansion into its sugar business, over $100 million US in cassava processing. Of course, the plan is ultimately to come back to release as a major holding company, something similar to the likes of Dangote. So there's lots of potential benefits we see in that direction for shareholders.
I'm just wondering, did they have to delist to release, get back on the NGX? Couldn't they just suspend the shares, do their restructuring? We saw Connell, Insurance do that. They came back as a holding company. They didn't have to delist to come back. So why take this move?
Yeah, so I'll see that the model in this case, this restructuring does not only covers a backward and forward integration. There's also a deliberate restructuring attempt to fuse over 22 segments of the business into just 5 key companies. What that means is that it's going to bundle all of the 22 subsidiaries together. So this delisting will have them. We'll see them first privatizing the institution and then coming to list as a holding company. So if you take a look at that, you will see that that process involves bringing in the different businesses as an holding company, which means that there's an extension to it just being in the food processing company, which had hitherto been listed.
Okay, so that's fantastic. We'll wait to see how that pans out for flour mills and for investors. I'm sure they're waiting with bated breath to see how that will impact their, revenue. So looking at more action in the market, Oando released their unaudited Q3 numbers yesterday. For you, Dr. Tijani, was it good or disappointing for investors?
Looks like a fantastic closure for investors in Oando. If you see, year to date, the stocks, even though it closed yesterday at about 73 naira, year to date has done close to 600%. In fact, specifically about 594% of the close of business, hinging up to as high as 95 naira, 95 naira 50 kobo. Specifically, even though we might say that in terms of expectation, there seems to be a marginal differential as to what investors are expecting. Of course, the revenues inched above 1 trillion. That's on 15%. If you look at it year on year from the last period last year. A further look, you see that the gross profit also grew marginally by some 9%. Other operating income by some 40%. By and large, you will see that the consolidation of his acquisition of ConocoPhillips about 10 years ago, and then of course his acquisition of Ajip Nigeria as at August 22nd this year, you will see that it's beginning to gather some momentum. Of course, his profit before tax also inched up to 28 billion. We're expected to see earnings per share, of course, closing on a positive note compared to what the same period last year. So it's a very interesting period for investors in the Oando PLC.
Fantastic news. So let's look at their EPS now. We said that it's standing at, is it 1 naira, 1 kobo? That's from 0. So looking at it now, does that tell the trajectory for investors in terms of will they start getting dividends from the company anytime soon?
Yeah, so there's a likelihood investors will get dividend anytime soon. And also for investors looking to medium and long term, it will be a very interesting investment avenue because like I mentioned earlier, the institution is just trying to beginning to consolidate its post-acquisition gains out of ConocoPhillips as well as Ajib. So in the immediate term, we can look to see dividends coming out of that company anytime soon.
Definitely, Oando is holding their AGM to their annual general meeting today. We'll see the resolutions that come out from that meeting, and we'll probably talk about that later on. Let's move now to the auctions. We saw yesterday the last bond auction for December. That's from the DMO, the Debt Management Office, took place, and we saw the result. But it shows lower borrowing when compared to November, where we saw over 300 billion naira, allotment given to market participants. Now, speaking from that, bouncing off from that, what are the expectations, especially with the fact that the budget, which is about 47.9 trillion, is going to be presented tomorrow at the National Assembly? What do you see this with deficits that's standing about 13 trillion? And the Minister of Finance is saying that the deficits will be funded through borrowings. How does that play into this? Where do you see, with the sentiment now that they're slowing down on borrowing, where do you see the picture for the DMO in terms of their calendar? How would it play for the borrowings? Is it domestic borrowing? Is it going to be foreign borrowings? And also, in terms of fiscal sustainability, how do you see the government managing the debt versus revenue here?
Yes, of course. The DMO's bond auction offered 120 billion for both 2029 and 2021. Again, an interesting time in the fixed income market. We saw the 2031 held steady at 22%, while the 2029 bond printed higher by 14 basis points. Amid fundamentals, you can see investor sentiment holding forth. Of course, for the 2029, previous top rate at 21%, we saw allotment closing in higher, and then of course the offer size of 60 billion for the 2031 investors bid were close to 400 times of what was offered to the market. Again, it demonstrates in terms of confidence, in terms of returns expectations amid other macroeconomic variables. If we look to the direction of what the government is saying, the Ministry of Finance is saying that yes, the budget deficits of 13 trillion, of course, will be financed deliberately with debt offer. So we expect that the market will also be so bullish as what we've experienced this year, since the government is also has also shown its position to say that this deficit of 13 trillion, 13.1 trillion will be financed by debt. So the expectations are pretty. It's going to also be a very interesting time for the fixed income market next year as well.
Okay, so it's also interesting at this time that the AFDB, as the Africa Development Bank, is holding meetings in Abuja right now, has launched the Debt Management Forum for Africa, DEMFA. The bank is proposing this as a platform for the continent to share their debt status and look at the challenges and also to reach a consensus on strategies to optimize debt and reduce costs. How do you see African countries playing into this or buying into this project and actually, getting transparent and also following the, finding a cap to, stopping borrowings and debt, getting that ceiling, not going above that debt ceiling that will probably be destructive for the country?
I think this is a deliberate step for Africa waking up to reality. This is a step in the right direction. It is one of the expectations for a pretty long time now. If we look at it, over 70% of Africa's publicly guaranteed debt are in US, denominated in USD, for instance. This is a chase for Africa to deliberately move from a debt sustainability to a debt productivity model. It is without gainsaying to know that Africa must begin to demonstrate a model where this debt exposure will begin to have an appraisal of productivity rather than maintaining a stance of sustaining budget deficit through debt. Like I said, is a step in the right direction, but of course we will expect to see implementation at individual countries level.
Thank you so much, Dr. Oladipo Tijani is the Group Chief Executive, First Icon Group. Thank you for joining us in Business Incorporated and sharing your perspective.
Thank you, Will.